Hello. Today is Saturday, August 19th, 2023. I'm Jason Shapiro with crowdedmarketreport.com. This past week I got a lot of calls and I had a lot of conversations with people out there who are having a tough time in the market this month. And I'm not just talking about sort of people that are long only stocks. The stock market's down. So clearly if you're long only, you're probably having trouble. But, I'm talking about people that do long short portfolios, people that do macro portfolios. And I think the main thing to keep in mind here is that trying to make money in the markets, trading the markets is a very, very, very difficult thing to do over time. Okay, you're dealing with trying to forecast price movements of things that really most of the time is random. So you're trying to forecast a random time series, which, is like chasing your tail, right? So you can look at things like the 50-day moving average, the 100-day moving average, the 200-day moving average, whatever you want. And I personally think that is garbage. And you can go and do very simple tests of this to find that those things offer no predictive ability whatsoever. And that's because we're dealing with things that are a time series that is most of the time random. So what I do think those things can be helpful with is risk management. If you believe in the 50-day moving average, okay, and you're long something and it goes back down through the 50-day moving average, then you can get out. And that, I think, can be very helpful because taking losses quickly as possible is the best thing you can do in this game. And if that helps you to do that, then I think that's wonderful, right? But, like you see people show charts. Oh, here's the 50-day moving average and this asset bounced off it, once, twice, three times, and here we go again. So now it's a buy. And then 3 weeks later, it went through it and it wasn't a buy. And so now they show a chart for the 100-day moving average. Oh, look, at the 100-day moving average, it bounced off it 1, 2, 3 times. Like, it's all in retrospect. And again, test it and you'll see it's very easy to do tests on this stuff. I think you'll find that it offers no value. But like I say, can offer value from a risk management standpoint. And this kind of brings me to the next point, which is that while you're sitting here trying to predict random price series, you're sitting here and like when you are having success, your psychology is like, oh, I'm doing great and I'm great at this and I can't lose. And then when you are having a hard time, your psychology is, oh my God, I'm terrible at this. I can't win. Nothing I do is right. And the truth is neither one of those things are true, right? Things are never as bad as you think they are, and things are never as good as they think you are. But the psychology gets you into a cycle of like, okay, so now you're doing great. So now you think you're great. So now you increase your size, and then you start losing, and then you get depressed, and so you cut back, and then that's when you do well. You're doing worse when you're trading the most money, taking the most risk, and you're doing best when you're taking the least risk, and that balance screws you up even more. And this brings me to like one conversation I had with a guy where I was like, dude, like right now isn't really a great time. We're in the middle of summer, which is always sort of a crappy time for the markets. We're seeing a lot of randomness out there. One day the NASDAQ's leading the market up, and the Dow's down, and the next day the Dow's up and the NASDAQ's down. It just shows sort of there's a lot of randomness going on out there right now. And from my point of view, the data that I look at shows that there's not really a big edge out there right now anyway. So I'm like, so maybe you need to cut back here. He's like, yeah, dude, but I need to make money. Like I got, 3 kids in private school and I've got, this big mortgage and all that. But it's like the market doesn't give a crap about any of that, right? The market's not here to pay you what you need it to pay you. In fact, I would argue it's the opposite. The market is here to take your money away. So you better be careful of that. So this kind of psychology is the main point of all this. That's the game, right? Given that you can't predict what, for most of the time, are random price moves, your psychology, and which comes down to your risk management and all that, is much more important. So how do we tackle that? And I've spoken about this quite a bit before, but I'm a big believer in the way we tackle that is we have to have a process that we trade, a repeatable process again and again. And of course, it starts with trying to build a process that captures some inefficiency somewhere over time that you can take advantage of. But once you can do that and you believe that you have something that does that, and clearly your P&L will speak to whether it does or doesn't, but then you don't have to worry about the psychology because then you're just following your process, okay? Here's the risk rewards in my favor. I'm going to take the trade. It doesn't work. I cut out of it. I take my loss. It does work. I ride it. I get my gain. And that's all you have to worry about. You don't have to worry about all these other things, what your mortgage payment is and this and that. And within that, you understand as you develop your process that like any process or like any trading thing, there's going to be drawdowns. It's part of it. Everybody's had them. Warren Buffett has drawn down 50% in his lifetime. George Soros has drawn down. Everybody draws down. And that's just part of the process. And you have to kind of monitor that, obviously, to make sure that's falling within your expected range, which is another great advantage of having a process, is you can go back and check it and see what your expected range would be so that you can monitor it. So that's really my answer to this whole thing of, I'm having a bad time. It happens, but you have to get a grasp of your psychology, and that can all be helped greatly by having a defined process that you use, and accepting the fact that sometimes it doesn't work and you have drawdowns, etc. Okay, so that's kind of my thought for the week. I hope that makes sense. Always happy to hear comments and questions. Hope to see you on crowdedmarketreport.com, and I hope everybody has a profitable week this week. All right, thank you.